Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Professor Young, good afternoon. Thanks for coming on the program today.
Happy to be here.
Well, last week, Professor, those employment numbers in the U.S. came out way better than expected, which for some raises concerns that the Federal Reserve could continue with a policy of aggressive monetary tightening. Stocks ended lower for the most part on Friday, though a small gain for the Dow. For the week, U.S. stocks were up. What's the story in the global markets as we start a new week?
Okay, well, for the week, Dow fell and S&P and NASDAQ rose, but on Friday, it was the opposite. Dow grew a little bit, but S&P and NASDAQ fell. NASDAQ fell by 0.5%. The mixed results were, as you mentioned, due to U.S. July job report, and the reason is that it really came out much stronger than expected. According to an economist survey before the results came out, the economist surveyed expected 250,000 jobs, but the report said that the U.S. gained 528,000 jobs, so it's more than twice the amount that was estimated. And this would have been a very good job report. This signals that the U.S. may actually be in a boom rather than a slowdown. The unemployment rate matched the lowest unemployment rate ever at 3.5%, and the job gains took place mostly in services, education and health, leisure and hospitality, professional and business services, and June employment was revised upward as well. Wage growth was also fairly high at 5.2%. It's lower than the inflation rate, but still, it's very high, and it shows that the job market may still be very tight. So this has raised the possibility that the Fed will raise the interest rate by 75 basis points in September, and the short-term bond rate inversion is the highest since year 2000, and because of the concerns about possible increase in interest rates, stock futures are flat, but we have a long time to go before the FOMC actually needs to raise or control the interest rate. The next FOMC meeting is in September 20th and 21st. There's no meeting in August because the Fed will meet for Jackson Hole meeting where they will talk about monetary policy, both practical and theoretical issues. So there's almost 2 months to go before U.S. adjusts its interest rates. So the numbers for consumer price index, July consumer index for U.S. is coming on Wednesday, and August CPI as well as the employment numbers will be absolutely crucial in Fed deciding whether they will raise the rates by 75 basis points or 50 basis points. Some Fed members have signaled that they will raise it by 75 basis points, but they also emphasize that the decision will be data-driven. Year to date, Dow is down 10.3%, S&P is down to 13.6%, NASDAQ is down by 20%. For the Asian markets, the markets are a bit mixed right now. The Nikkei is up, Shanghai is up, but Hang Seng is down. But the Asian market seems to have shaken off the Chinese military drills around Taiwan that took place last week. China's exports were also unexpectedly higher. The outbound shipment rose by 18%, and it beat expectations of 15.0%, even though the global demand shrank. And the transportation bottleneck coming out of China seems to be easing. So China had a very high trade surplus at $101.26 billion, again, beating estimates of $90 billion. And its economic activity seems to be accelerating again. China's coal imports are up 24% due to increase in demand for energy. European markets, on Friday, all the major markets, FTSE, DAX, and CAC were down, and this is due mostly because of the U.S. job report being better than expected, but also UK had a interest rate increase of 50 basis points, and the UK inflation is expected to peak above 13% in October. So this is making the European market sluggish.
Well, Korean stocks were a mix today, too. It seems much for the same reasons. Almost flat, though. Foreigners remain net buyers. Carmakers doing okay. Utilities, too. The KOSPI's been getting close to 2,500 points. Not quite, though. Tell us about the domestic market.
Okay, well, last week was a good week for the Korean market. KOSPI rose by 1.6%, but KOSDAQ by 3.5%. But as you mentioned, today it was split mixed. KOSPI was up only 0.09%, ended at 93.10. Individuals and foreigners bought, institutions sold. KOSDAQ was down 0.09%, ended today at 830.88. Individuals bought, institutions and foreigners sold. The downturn or the weak market was led by semiconductors. Both Samsung and SK Hynix were down. SK Hynix seems to be down because they were trying to build a factory in the city of Yeoju, but the city government now wants more compensation for building the factory in their neighborhood, especially the fees for industrial water supply. Year-to-date, KOSPI is down 16.6%. KOSDAQ is down 19.9%.
And Professor, the Korean government's going to announce some policies to help with the high cost of buying food and things for the Chuseok holiday next month. We've also got inflation running at above 6% right now, of course. Employment data due for July. Some statistics you mentioned from the U.S. as well. What's on your radar in the week ahead?
Okay, well, Bank of Korea has the money supply and liquidity report for June, July export and import price index, and the Statistics Korea has second quarter domestic manufacturing trends and household survey trend reports. But the major report for Korea is coming out on Wednesday, which is the July employment report. And then the U.S. on Wednesday, as I mentioned before, the big variable, arguably the most important piece of data for global economy is July's consumer price index. CNBC expects the CPI inflation to come down from 9.1% to 8.7%. But the problem is these kind of estimates have been wrong before. For the last 3 or 4 months, estimates have been lower than the actual inflation. But if indeed the U.S. inflation has gone down, then that might set Fed to a slower interest rate growth path, which will be helpful not only for Korea but for global economy. On Thursday, U.S. has producers price index, and on Friday, University of Michigan consumer sentiment and inflationary expectation figures as well.
All right, we'll be looking forward to hearing from you about all those figures later in the week, Professor. We'll have to leave it there for today, though. Thank you, as always, for coming on the program. We appreciate it.
Thank you.